presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading in YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up. And,
awesome.
I know quality when I see it, or at least I like to think so. And, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
My pleasure.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We got 5 days a week. We go 7 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. You are what you believe you are. Humans are powerful magicians. You have the power to make yourself what you are right now, but it's not your reasoning mind that controls your power. It's what you believe. Market-wise, let's take a look at it out here. We have the Dow Industrials right now trading up 110. Nasdaq's up 4 points. S&Ps are up 8. Gold contract up $8.30, trading at $17.77 an ounce. Silver up 48 cents, $22.15 an ounce. Light sweet crude down $3.57, $85.38 a barrel. Notes and bonds. The 10-year note down 6 ticks, trading 112.03. The 30-year off 6 at 123.20. And King Dollar. King Dollar's up 376 ticks, trading 106.668. The euro is at 103. The yen is out here at a price point of 139.86, and the British pound is at 117 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. We are going to go over to the world of our man, Mr. Dave Mazza. Dave is the head of product and a managing director at Direction Shares. And volatility, metals, we have all sorts of deals out here. Dave Mazza, how you doing?
I'm doing well. Happy to be back with you.
I'm telling you, it's so great to have you back. And I want to start off with with last week. And the reason I do, I always watch as money goes into the SPXS and SPXL in and out. And last week, there was quite a shift, wasn't there?
Yeah, no. What's really fascinating to me, I've noticed this for a few weeks now, is that it took a little while, but we are now really seeing the action happen on the inverse funds, and so those are the bear products.
Yes.
And in particular, the ratio of SPXL and SPXS has gotten closer to parity, and by that I mean people are using are going long to go short in really an outright way, because SPXS provides 3 times the inverse exposure of the S&P 500 on a daily basis.
Right, no doubt. Now, I want to change gears on you for a second, because we have a lot of action happening. And, folks, you can come over to our website at TFNN. You're going to see the direction banner right there. Hit the banner, bring it up, and you're going to see all the different ETFs they have. And, we've traded the Nugget, the J-Nug a lot, and we have, gold running right now. So we want you to be aware of that, because they're great vehicles. But now we have a new vehicle, and we want to talk to Dave about it. In the new vehicle, and this is really cool, Dave, because we get a lot of calls in the aluminum business, in the steel business, in the metal business in general. And they have a new ETF, folks, okay? This has been around for a bit, but a few months. I think that's all it is. And I'm talking about the daily metal miners, Dave. It's 2 times. I was looking at the holdings. So tell us about this.
Yeah, so MNN, that's 2 times bull fund on, we call it the metal miners.
Yes.
So as you know, and folks who are on the audience here are likely familiar with Nugget and Dust, to your point. Those are gold miners, and those are great because it's amplified exposure in a concentrated area. But as you noted a moment ago, there's all these other sort of metals that can have kind of different idiosyncratic returns and volatility. And that's why we thought kind of it was a gap in the lineup around not having something on that space. So this actually provides exposure more to steel and aluminum. Now, there's a little bit of exposure to gold mining companies in here because some miners are doing copper and gold and all that.
Sure, right.
Time. But this is more of like your really industrial type metal play as opposed to the nugget and dust of the world, which again are providing more pure play exposure to gold miners.
And the symbol again, folks, so you can check it out, is M as in Mary, N Nancy, M Mary. So check it out. Now, let's go on to Nugget, because we know, and if you're not familiar with Nugget, folks, what Nugget is a 2 times of the bottom line, the NYSE ARCA Miners Index. So, and when you're looking for something, you know, that bottom line spreads across it, you get a lot of good exposure. And it looks to me, Dave, that, you know, the bottom line, the dollar is pulling back pretty dramatically, and gold and the markets can finally breathe.
Yeah, no, you're absolutely right. So our gold miners funds actually are the suite. Were for a long time the largest funds in the directions leverage and inverse lineup. As we know, miners have a lot of volatility. They have a high correlation or inverse correlation, I should say, to the dollar, to interest rates, and of course, even though they're stocks, the relationship with the commodity itself.
Sure.
And then, you know, really in the last couple of years, as everyone's gravitated towards trading the semis and the tech space and other tech-related names. But these funds have really come back in a big way because now we got some action happening again in the commodity space. And what I think is interesting here is there's, you know, for traders, maybe some pent up demand, you know, because we didn't see that action. And you're absolutely right. The dollar had really been just like it couldn't take a hit, right? Because it was so strong, particularly relative to some weaker economies. And now that we may finally see inflation peaking, it's certainly not over, may finally see the interest rate environment still going up, but not necessarily at the pace it has been, it gives a little bit of a reprieve to gold as a commodity, and then, of course, the related mining stocks.
No doubt. And listen, I really think you're onto something with that metals one, too, because my take is this is almost like 2002 to 11. I think we got a commodity run happening. And you wouldn't, well, I'm sure you'll believe it, because the amount of calls that, you know, I had been getting prior to this, because gold's been a bummer. I mean, that's the bottom line. But I was getting calls that, no, the reason that it's going down is that because everyone's buying Bitcoin. I'm saying to myself, oh, my God, because I'm not a Bitcoin deal. You know what I mean? But it was pretty ironic that when those explosions happen on the downside, that's when gold takes off like a rocket ship. So it's going to be really interesting in the future to see that, okay, can I feel it, hold it, you know, is it backed? You know what I'm saying? So it's been quite a ride. There's no doubt about that.
Absolutely correct. And yeah, we obviously know what's going on with Bitcoin and crypto these days. So gold might be a real haven in this environment.
Right. You got to stay on a regulated exchange, folks. That's the bottom line. You work hard for your money, stay on a regulated exchange. Dave, you have a great one, safe one. We look forward to speaking to you 2 weeks from today.
Thank you. Happy trading, everyone.
Happy trading. That's a beautiful thing. Stay right there, folks. We'll come right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. The Dow Industrials right now trading down 11. You get the Nasdaq off 51, S&P's off 9. Let's get over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the hour. And don't forget, folks, Steve has an outstanding show here every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, Mastering Probability. Now, it's very easy to get Steve's newsletter, folks. Come over to our website at TFNN. You're going to go into newsletters. You're going to see it right on the right-hand side. You hit that button. You hit subscribe. You can get Mastering Probability for 1 month for $149. You can get it for 6 months for $695, which is a savings of $199 at 22%. And you can get it for 1 year for $1195. Which is a savings of $593 at 33%. Now, they all come with a 30-day money-back guarantee, folks, okay? So you can come over, you get a great newsletter, we have a great trading market, and Steve's got a huge amount of archives on this. So you're really going to understand how the market moves and how Steve looks at the market each and every trading day. Steve Rhodes, what's going on?
Well, albeit belated, happy Veterans Day. Sorry that I didn't get a chance to tell you that on Sunday. And I believe you also had a birthday, too, so happy birthday.
You know, I have it made. So my birthday, folks, is November 9th. The Marine Corps birthday is November 10th. And Veterans Day is November 11th. So I always have a field day, man. Exactly. Thank you. And I had a blast.
Good. Well, I played in a tournament to raise money for the veterans.
Nice.
Friday afternoon. So that was a really nice thing to do. And our club has done it for the last several years, ever since we got a new professional. He brought it from his old club over to our club.
Nice.
And it was really just a great afternoon. Every foursome, and we were packed. Every foursome had a vet in it, so we played as fivesomes. It was really just a fun day. And then a couple guys got up to speak and share with us their experience, but what all the raising of the money is doing for them and for others. So really,
the support is huge. There's no doubt. And what happens, folks, unfortunately, and this is real, okay? They want to send everyone to war, and when they come back, they forget about them, man. That's the bottom line. But that's awesome, Steve. Thank you very much.
Yeah. So, hey, we also have something to celebrate. I believe that your Buccaneers and my Dolphins are both leading their division.
Thank God. I'm seeing Brady 2 in a row. That's good. Trust me, I know.
Absolutely.
And it's not like the Dolphins. The Dolphins, I feel like I'm back 20 years now, right? I mean, it's...
We'll see.
Yeah,
we'll see. Yeah. I hate getting ahead of myself with too many letdowns with those guys. Right. But it is nice to have a couple of Florida teams, up there. So, hey, I thought that we'd try to answer the question that probably is on everybody's mind, which is, have we begun a new bull market? So let's take a look at a couple of things. First, let's look at the weekly chart. This is a weekly chart for the S&P 500. And one of the patterns that I talk about and I teach folks is I refer to as the Rhodes Momentum Indicator signal. And that's primarily what we're going to talk about. Folks, if you also see this red and green line on these charts here, that's referred to as the oscillator and change line. So those are both things that I teach to subscribers. And here you can determine the value of this pattern out here. So the week of October 21st, Tom, of this, just recently here, on a weekly basis, the S&P 500 confirmed a Rhodes Momentum Indicator bottom pattern. And prices above this oscillator and change line, both of those are bullish conditions. Still doesn't tell us whether we're in a new bull market or not, but we do have a very important bottoming signal that formed a few weeks ago. If we look at all of the historical S&P weekly Rhodes Momentum bottoming patterns out here, maybe this will provide us with some additional information. So, for example, prior to the one that just formed, back on October 7, 2011, there was a Rhodes Momentum Indicator bottom that formed out here. If we take a look at this blue arrow, and that certainly formed a new bull market out there. So October 7th, the week of October 7th, 2011, we had a nice, and there's certain rules to this pattern, folks. So I teach it to you. It's very easy. You can apply it to your charts, all time frames. If we go back to the next Rhodes Momentum Indicator bottom that formed before that, that takes us back to March of 2009. And clearly that led to a new bull market. Now, prior to that one, this which is right where my arrow is at, there was another Rhodes Momentum Indicator bottom that formed on the way down from 2007 to the March 2009 bottom. And that formed on November 28th. And that ended up failing the week of February 27th. So the pattern formed here where the blue arrow's at. I know a lot of folks are watching us on Tiger TV, and they grab these charts off of their screen and inside the den as well. And that pattern actually failed when price closed below that candle where I've got that blue arrow, the red candle out there. So that negated it. But the cool thing is, like all patterns, they don't work 100% of the time. But oftentimes a failed Rhodes Momentum Indicator bottom will lead to another one. And that other pattern or other patterns like that can, in fact, lead to success. That's what took place at that March 2009 bottom. We've got another example because from March 2009 to find another weekly.
Yeah, this is really cool, Steve. Wow.
We've got to go all the way back to 2000. So, folks, I'm not cherry picking this. I'm taking all of them so that we can see what happened. And during that 2000 bull market, there were a number of signals, but only two. A number of pattern signals that formed, but only two were actually signals themselves or actual bottom, followed the rules out there. And the first bottom formed on July 5th, 2002. That's this red arrow. And that followed the very next week out there. So, okay, you're out. You have your stop in place. But the 2000 bull market began where the blue arrow is at, another Rhodes Momentum Indicator bottom. That was on October 11, 2002. Again, no cherry picking here. Take a look at the ones that work, the ones that fail. The next prior one, Tom, that we've got to go to is August 13th, 1982. And that was truly the end of the 1980 bear market. That was the end of it right here. A Rhodes Momentum Indicator bottom. Follow the signals. This other one that's shown here did not follow the signal, so it was not a confirmed Rhodes Momentum Indicator bottom signal. And then the only monthly, because somebody might say, well, you're looking at the weekly. What about monthly signals? The only monthly, this actually surprised me when I was working on this weekend for us. The only one that actually formed was back in 2003, which was definitely a bottom. Led to a 4+ year rally into our 2007 top out there.
Okay.
So if we then take a look at the core indices, so most of the folks that are listening, they're either trading the Dow, the S&P, the NASDAQ 100, the Russell, the semis out there, maybe the transports. So 6 of these 8 charts here, these are the cash indices. These are for their weekly time frame. 6 of the 8 charts here show Rhodes Momentum Indicator bottoms. Actually, the transports or the semis, they don't show a Rhodes Momentum Indicator bottom. What they show is a TD9 count bottom. We're not going to talk about that during this segment, but it's also another pattern that I teach the folks. So we've got really good bottoming signals. So I know there's a lot of folks out there, and they're saying, wait a minute, Steve-O, are you sure we've begun a new bull market? My answer to that is no. And the reason that I say no is because when I take a look at the four core charts for the indices, the S&P, the NASDAQ 100, the Dow, and the Russell, I've got these diagonal channel lines out there, kind of courtesy of Bud Rolfs.
Yes.
And right now, the only one that is broken out is the Dow. Took this snapshot, folks, maybe about a half an hour ago. And so the Dow's broken out. But in the Russell 2000 traded right up into that trend line on Friday, Tom. It was kind of like, what? And even as a half an hour ago. So we only have one of the 4 cores that have broken through a descending channel line to suggest to us that maybe that there's a change in trend. I think if all 4 of these break through, then those signals of that Rhodes Momentum Indicator bottom probably are suggesting that we've had a major move. But right now we don't. I think what we see out here is more rally, and likely we're going to see the S&P and the NASDAQ 100 get up to those descending channel lines. And when that takes place, then we'll come back and take a look at these charts and try to figure out what they mean to us.
You know what's so cool what you just did there, Steve? This is amazing, folks. Remember, you can do this in an archive. So picture, you and I, we trade a lot. So picture, it can go all the way up there, right? And we know, though, that it was a decent bottom because look. So if you come back down again, big deal. It's not the end of the world, right? Because
absolutely.
Because it will probably make it because there was so much sell on the first one. And then so we're off the races on the way down, folks. You're off the races on the way back up. Great,
absolutely.
Great analysis, man. Have a
Thanks,
great
Tom.
one and safe one, Steve.
You too. Take care.
Stay right there, folks. We'll come right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials up 24, Nasdaq's down 42, S&P's off 6.5. So let's go over to Tesla, because what you have happening, this whole deal at Twitter, folks, has to be taking some of this guy's time up, because, well, you know, when we look at it, you know, in the last 3 months, Tesla went from 313, it's trading 192 right now. And if we pull this back a bit, put this on a monthly, bottom line is that, you know, we'll see. I mean, it's going to have to get above 206 to get in its higher range. You don't get above 206 in the next week and a half, man, this thing's going to be coming on down. You know, I mean, 91 is game. I mean, there's a lot of lower prices that are game. And the news on Twitter today, this just doesn't stop, man. The news on Twitter today, so picture, he had already got rid of, you know, so many employees. Well, today what he did is that he canned 4,400 out of the 5,500 subcontractors he has. So he is, you know, I mean, he'd give Chainsaw Al, you know, he'd have to find a new name for him because this is pretty intense. The real question is, we'll see where it goes and we'll see what he can pull off. But and if you heard Tommy this morning, Musk has always double dealt. I mean, you know, they brought him to court when he bought First Solar. He won the case. Bottom line, what he did out here, you know, basically over the weekend, I believe, is that he started having SpaceX be an investor. I mean, not an investor, an advertiser on Twitter. But bottom line is, it's going to be really intriguing watching where this whole thing does shake out. If we look at some of the higher volume equities out here today inside of this market, what you have Advanced Micro's up $1.92. You get Tesla down 3.5. Nvidia's up 66. Facebook is up $1.30. Nothing real heavy. And that would make sense, by the way, okay? Because if you take a look at the S&P, just the market in general, you know, you've heard me say this a million times. What happens, folks, is this. The market's all about energy, okay? And this has been an amazing run. I mean, the bottom line is that, you know, when we take a look at this off that October 13th low, you know, the SPY was 348 or 397. And my take is that it still wants to get up to that 440. When we take a look at that and say retracement-wise, well, the bottom line, and this is what's really intriguing here, we are at a 0.618 from the highs that were established in August to the lows that were established in October. Now, what a 618 retracement means is this, that you have a very strong trend, okay? So just that in itself is a strong trend. I suspect that we won't even back off this, though. And if we don't back off this, if we go sideways for a couple days and the dollar goes down again and you bust topside again, this thing is not only going to hit, what's intriguing is that the 411.73, which is the swing, it's 411.99. That is the 0.764 of the whole move. And that's a fib number also, okay? We don't use it a lot. We want a 0.382618. But the bottom line, it is a fib. And so, hey, we'll see where this shakes out. But this is still saying to me that, you know what, higher prices are coming at us. And when I was asking Dave Mazza, the product and managing director of Direction, about the SPXL and the SPXS, what had happened last week is right prior to that explosion to the top side, the amount of money that actually went in the S&Ps and the NASDAQ short funds were explosive, man. People moved them right in the wrong time. So what ends up happening there, of course, is that you got to change it. You got to flip that position around, because if you don't flip that position around, here. I'm just going to bring this up so you can see that you're forced to flip this position around, because if we go back, this is going to be the short fund, and you're going to see what it did. I mean, yeah, it went from $25 to $19.86 in a heartbeat. No, almost $26, $25.90. 5 days later, it's $20. So, and it's intriguing here. Now look at this. Now I don't use ABC structures on the doubles or triples, the leverage product. But guess what? This one here, it blew away the B point, blew it away with volume. That's saying that baby's going lower also. If we go inside the Dow Industrials and we take a look at the strength versus the weakness out here, point-wise out here, this is what we have. You have Johnson & Johnson putting 22 positive points, Visa 20, Merck 19, Travelers 16. Taken away from it, Home Depot minus 39, Microsoft minus 29, United Health minus 23. Now let's go to Home Depot, because Home Depot is coming out with their numbers tomorrow. But yeah, before the market. Okay, so Home Depot is also looking, it's down $6 right now. Home Depot is looking to take, look at this drop. This is a monster drop, man. Wow. Look at this, 90 days. So last quarter, they took in $43 billion. This quarter, $37. That's what they're looking for. Last quarter, they made $5. This quarter, $4. So, and what that's going to be, folks, that's the construction business. The bottom line is that, real estate in general, that those rates make a difference. Now, That being said, guess what? You know, you're down $5. Home Depot, man. Look at this, man. This took off just like the market did. Let me look at this for a second, because you might have an ABC up. You don't have an ABC up. You know, if this, tomorrow, if this can get down, this is going to be interesting, because you had a sign of strength on Friday, as the whole market did, Thursday actually. It can pull back that sign of strength, man. If this pulls back that sign of strength and even closes that gap like 292, you want to be all over it. The reason you want to be all over it is this. See that high volume? Home Depot at 332 has a high volume spike, man. This one's higher price. Let me look at Lowe's. This is interesting. You know, because we take a look at Lowe's. Same with Lowe's. Yeah. Lowe's has a high volume higher at 221. You pull back, you get back there with lighter volume. That says it's the go. Let's go to one of the builders. We'll go over the Toll Brothers and take a look at Toll. I was looking at this earlier. This also did it. You know, now the difference with Toll Brothers, it doesn't have a high volume high. But we have sign of strength. Bottom line, you check out the consolidation. This pulls back. You know, just might have something there. What we did do, here, let me bring up the XAU and the HUI. So my take is that metals, gold's going for the 1900 point, silver's going for the $30 level, because the dollar's going south. Now, when you take a look at this, you're going to see, we put this up, and we were talking about this about a week and a half ago. You know, bottom line is that the metals were coming into their consolidation, and they came in with volume, and they broke it. They broke it with volume. You know, so that's saying that if we look at the XAU, you're at 118, you know, the high. Your benchmark here, the benchmark is June 3rd. June 3rd, that's the next stop, I suspect, for the XAU. Right now, that's 118. We're trading 118. 137 is where it wants to go. And if we take a look at the Gold Bugs Index, same type of setup. Had a nice consolidation. Broke the consolidation with volume, so you get buyers out there. And the Gold Bugs Index, you know, bottom line wants to run up to this 269. Now, the cool thing is if you're in the metals, right, what we did have, and you've heard me say this a million times, the streamers are going in a spectacular way. If we look at Royal Gold in 8 days went from $86 to $106, okay? Franco-Nevada, FNB, the streamer means, folks, that they're like a gold bank. They make their money by basically supporting companies, but then they get the gross revenue, a percentage of the gross revenue. So they have no expenses. And if you look at Franco-Nevada, that's almost at the highs, which is 148. You're at 142. And that went from 116 to 142 in 6 days. Stay right there, folks. We'll come right back.
Potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien. Welcome back, folks. Dow Industrials up 13, Nasdaq's down 57, S&Ps are up 9. So let's go look at that silver contract first. Okay, so silver right now, folks, bottom line, you know, silver is highly volatile, much more volatile than gold. And when it moves, it really moves. I mean, we have 60,000 contracts traded out here today. You're up 44 cents. Your swing point, you know, is 22.80. You're 22.10. And, you know, bottom line, that's looking like it's going to go right after it. Let me go put this up on a continuous contract. So I'm going to put it up a continuous contract, put it in a couple year perspective. And see, it's just getting in. It's just getting into its higher range. The higher range, you know, 2180, and we're 2210, which is good. You get that higher range, man, and then it's game. It's game up to $27, $30. If we go look at the SLV, the SLV is the ETF for it. What you're going to see in the ETF, you know, bottom line is that this is already at $20. It broke the consolidation with volume. See that right there? Last week we did, what, 31 million shares. The swing point at 22 million. We put this on a weekly, and 2027. 2027, it's just coming into the higher range. So that's telling me that this thing also wants to run the 2490 level. Now, what is, you know, one of the tigers is saying, you know, it feels, you know, a little frothy here. When I started the program, I was talking about the S&P, the broad market, you know, that it wants higher and it's going to be hard to stay long. And it's the exact same thing because the run was so fast. With the silver and gold stocks, it's the same way there, man. It's like, I dig it, but it's going to be hard to stay long because it does feel that, you know, we've been doing this long enough. I mean, I started the gold report in 2002, okay? So, you know, my take is, though, that this is it. This is going to go. And it has to do with the aspect of the structure inside the dollar and the structure inside bonds. Because, yeah, you got to look at bonds. Watch this, man. You see this. Bonds continue to go higher. Now, I think this is counter trend bounce too, but it has volume behind the move. You know, the bottom line is that last Thursday we took off with volume. So if you're into the Fibonacci contraction expansion theory, well, you know, it can still be a dead cat bounce, and the 10-year can get up to 114. You're trading 112. It might go to 115. You can see this came off a low at volume, and we know the market is, you know, deviant. Let's go to our man Andy in Colorado. Andy, what's going on, brother?
Tom, how you been?
I've been doing good, man. I heard it got a little chilly out there today.
Well, it's the time of year, right?
I know, that's right. You live in a beautiful place, there's no doubt, man.
Belated happy birthday, by the way.
Thank you so much, man. Hey, listen, can you imagine, you know, I know we have you on that promotion, but By any chance, you see how big Tommy got? Tommy's huge now. I mean,
I missed it.
He's so long, it's unbelievable. We're going to get him on again. It's so cool. And he's a trip. He's going to be doing a radio show before he knows it.
I don't know.
So, Mosaic, right?
Mosaic, but also, so I got in at 49, started position, and I want to add more. I think I can wait till it gets back a little bit more.
Okay, so let's take a look at it. Mosaic, folks, is, you're talking about nitrogen, the nutrients, the whole ball of wax. The low's 33, the high's 79. The PE is trading 11. They have a 1.1% dividend. And let's put this on a weekly. Okay. So let's see. So this is interesting. Look at how, right where it came down to. It came down. So is it back inside 49 yet? Yeah, it is. Oh, good. I see what you did. Oh, that's awesome, man. You got back in where that strength was, huh? Didn't you? Look at that.
Yeah.
Nice. Good move, man. Okay. So.
But I started a small position, and I'm just nibbling at a couple of these commodities plays like Mosaic and EWZ, just to come in. But I want to add to them eventually. But also, I want to talk to you on a bigger picture. You're saying like bonds are kind of coming back. That means interest rates are falling. And with this yield curve inversion, I'm afraid that we're not done with this bad news. In other words, I think
that's correct. That's my take too. No, this is a heck of a counter trend rally, but we're not done with it. The inflation's not going to get over just like that. This is a good counter trend move because more than likely, plenty of people have sold. Too many people were shot. Do you know what I'm saying? Hey, listen, with Mosaic, I can see it because what we don't have there, right? And I'm sure you know that, and that's why I can think. We want to see a sign of strength. You know what I mean? Coming off of this. And, actually, last week wasn't bad. It had an expansion of volume. So the week before was 23 million. Last week was, week before was 23.2, and there's only 100,000 more. Yeah, I mean, I on the larger picture, Andy, I think that this is going to be the commodity run from 2002 to 2011. All commodities are going to go because I think the dollar, is going to pull back again,
Right. Yep.
And
I'm definitely holding now. I mean, I've been in and out a few times over the past 6 months or so, but I'm definitely holding on now.
Right. And, what Andy's doing, this is what's cool, folks. If you get prepared that, you come in slow and you get prepared and you have a good technical and good fundamental reason, it's a lot easier buying when they pull back, I think you're onto something, man. I mean, that's where my head's at. That's what I'm doing. Because the long ball game is going to be the number here. We tested the lows a dozen times, and it's all about the dollar. And I think rates will calm down for a bit. But that being said, the bottom line is that we get a couple more CPIs, and the CPI prints. They're not going to go away. There's a couple. Well, I think Goldman come out and said that they think inflation is going to fall off the cliff. Next year. I mean, they're pushing paper, folks. Exactly.
So the CPI is going to come out right before the December meeting, and the 0.5 is going to get them to their target that they put out this spring, right? But I'm saying just credibility's sake, they'll do the 0.5, but that might be it. I don't know. But I'm also thinking that after the end of January is going to be pretty bad because they're going to that's when the Christmas numbers are going to be coming back out, and
right.
I don't think it's going to be a very good Christmas. That's why I'm kind of like sitting on my hands still. I've been sitting on them for a long time.
Because,
they're starting to get numb.
Because, folks, this is what normally happens in inflation. If you're looking at my screen, the Fed fund rate right now is 3.75 to 4. Let's call it 4. Until the Fed stops slowing down, that inflation rate is either going to be at the same or the Fed funds rate or lower. Okay, we're not even close to it. Do you know what I mean? So if it's still running at, it was 8, right? Right. That's 4 more points. 4 more points. I mean, do we really think prices are going to get down that low? I don't think so, man.
No.
Yeah, not in 6 months,
Okay, all right.
Man, you have a great one, a safe one, man.
You only have one of those 4 that good signs, so I'll take that.
That's right.
Appreciate it.
Have a great one, man. Have a safe one. Stay right there, folks.
Bye-bye.
Come right back.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. The Dow Industrial's down 129, Nasdaq's up 94, S&P's up 23. And it says, folks, if you haven't been to the Tiger's Den, get over to and get in the Tiger's Den. It's $1 for the year. We only charge $1, so we don't have any scammers in there. And one of our Tigers just said, and this is so true, man. Remember, thanks, Dan, for sending this over, too. Remember, if prices stabilize here, in 1 year, 12 months, the CPI falls to 0. Prices don't need to fall. Prices need to keep rising and try to sustain inflation. So the stability is the big deal, and he's right. And what's intriguing, if you remember, it looked to me like, now it's 8 or 9 months ago, what had happened is that we went sideways, and then everything went up 30%. Like they're saying 8, man. It seems like everything went up 30, 35%. And what you have now is that, yes, we're at higher prices, but these actually, right, that the CPI is predicated on what is it from last year to this year. So the bottom line is that, this last print was still high. There's no doubt about that. Prices are still going up. But what does happen is that as, unfortunately, you get layoffs that are happening, there's less cash that's around, that stabilizes prices. And if the prices stabilize, that's what's so cool about numbers in general. What ends up happening in numbers in general is that, the bottom line, they catch up. Now, that's the good about numbers. And then the longer basis about numbers, what it is that things are always going to be more expensive. All you have to remember, folks, is that yes, whether it's milk, bread, and cigarettes, whatever you had to go get for your mother and father when you were a kid, think about what they are now, and you can expand that out. The bottom line, even at 2%, things are always going to get bigger. And that's why, in the longer run, Hard assets are where it's at, because whatever that is, that's going to keep going, period. Because guess what? The rest of it is fiat money, and fiat money always gets smaller, smaller, and smaller. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night, folks. Have a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 in the morning. Great show, folks. We'll get him, folks.